What's going on YouTube? It's Dave's Daily Trades back at it again with another video. And today, of course, we are going to be covering AMC. So a few things that I want to cover today. First is going to be the reverse repo hitting 1 billion once again. We're going to be going over some new DTCC requirements and of course, going over a technical analysis and price predictions for Monday. So let's start with the technical analysis here. So of course, guys, not a terrible day. Started off the day down low, hitting this resistance of $32. So we bounced off of this not once, not twice, but 3 times on the 1-minute chart before starting off and kicking on this bullish run where we hit a high of $34.48. Now, for the rest of the day, we did see a brief sell-off, but it was nothing too crazy. We were able to close on a Friday, which is really great to see because literally every single Friday for the past, I don't even know how long, we have been red or relatively flat for the day. So to see 1.24% for the day, I'll absolutely take it. It was only 41 cents, but guys, a green day is a green day, and especially on Friday, that makes it all that much better. So as for consolidation, because that is one thing we're always looking for, I would say our best consolidation came from just about from 1230 to 130 here in this gap, and we can confirm this right on the MACD. So a few interesting things to note. As you can see, during this time from 1230 all the way to 130-ish, we actually had a decreasing MACD. But at the same time, we were relatively flat, and you can even argue that this was actually a decent run up. So that's really interesting to see because usually when MACD is pointing down, the stock price points down as well. So this was going against the trend, which is really cool. So that's one thing I want to point out. Down here on the RSI, guys, we did test oversold a few times, and actually a majority of our trading day was below the 50 area on the RSI. And it was only in this front half of the morning where we were above 50, hence our bullish run up to the high of $34.48. Now we'll jump over to we're going to skip the 1 hour. We're just going to look at the 1 day here because this is my favorite thing. And I'm just going to zoom out here. As we can see here, guys, we have seen, I forget the exact count, but this is like 35, 40 trading days of all of this red selling pressure. And this happened once we had the bearish reversal on the MACD crossover here. And this started, you can say, probably the end of June, so June 21st, June 22nd timeframe. And literally from then, for over almost 2 months straight, we saw this decreasing of the price. And of course, it really sucked. Of course, we don't want to see our beloved AMC stock price literally almost get cut in half. But that's what happened. But today, guys, look at this. And I know it's such a little green candle, but I am so excited because of this. We can see here, and I'm sorry if you can't see because my screen sucks, but we can see the first green bar here. And of course, the MACD starting to cross over. So what does this say? It says that the AMC bulls are stepping in. I mean, there have been a decent amount of 13Fs coming up where big whales are stepping in, adding to their positions, or even new whales stepping in and creating new positions. So that's really great to see. Of course, the big thing is, guys, follow big money because that plays a big picture. So, of course, we'll see how this plays out next week. I believe this is going to take a few days to play out because if we jump back over here, we had this first MACD crossover right around June 11th. And for things to get interesting because it really hugged each other for quite some time and didn't get interesting until, of course, the end of the end of May. So, of course, it's going to take some time to play out, but the bulls are here. Things are going to be looking good for the next couple of weeks, and I know I am freaking excited about this. So, price predictions for Monday. I believe what we're going to see is a relatively, I don't think things are going to be absolutely crazy, but I think our first area is going to be that $35 range. I do believe that we are going to break through this and float somewhere in between the $35 and $40 price range. So, we have tested this lower range right here on this red line here. So now I really think we're going to start making moves to this top range over here at $42. And it is going to take a little bit to break out of this area since we have been trading in this for so long. So, of course, the next couple weeks we do have this to watch for. it will be certainly very interesting. So price predictions for Monday, I'm going to say we're going to break $35 and trade in between this $35 to $40 range. Let's see how that goes. Anyways, guys, first thing on the list, reversed repos. Over $1 billion again. Look at this, 1.05 billion. So, interesting enough, I know we've already seen 1 billion, and that isn't really the biggest achievement for us. But the big thing is we haven't seen 3 straight days of being over 1 billion ever. This is insane. This means that banks, market makers, hedge funds, they are hurting, guys. The market is not looking good. Of course, I do know we reached all-time highs, but the reason the reverse repos are actually going on is because banks, market makers, hedge funds, they don't want to put their money in the market because it is overvalued and very risky. So they're dumping all of this money over here. And of course, 3 straight days of $1 billion, that is quite a lot of money there. So we'll see how this plays out. Usually what happens is Friday will pick up to the highest, and by Monday it'll drop down probably in between like 950 billion to 975 billion. And then throughout the week, we'll see it creep back up into the 1 billion range. So we'll see how this plays out. Very curious to see what Monday and Tuesday look like on this. So this is something I'm absolutely going to be covering in every single video because I really think that this is an important catalyst to keep eyes on for the overall market and how it's going to relate to AMC and GME here. All right, so on to the interesting portion of this. So this is a Reddit post, which of course that I'll link in the description below, and same with the link for the reverse repo on the Fed's website. But starting September 1st, margin call volume will increase according to the DTCC. The pressure to cover is only increasing. So, of course, as we know, guys, a margin call doesn't just end everything. You can get a margin call, put up more liquidity or more assets to meet those margin requirements, which only buys you a little bit more time. So, the big thing here is the volume of margin calls, because you only can kind of run away from that issue for so long until it really catches up to you. And we do know how over-leveraged and how risky these hedge funds, market makers, and banks' positions truly are. So let's just read through this really quick. So during his opening remarks, DTCC's Bob Stewart, Executive Director of Product Management for Institutional Trade Processing, discussed the impact of Phase 5 of Uncleared Margin Rules, UMR, for over-the-counter OTC, which of course AMC is, derivatives, which kicks in on September 1st, 2021, which we'll check here on the calendar. That's only a few weeks away, guys. If we look at Monday, which is the 16th, we have 2.5 weeks until this actually comes into play. So what does he say? This is all highlighted right here. There will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians to safe keep collateral. As a result, UMR will likely require many buy-side firms to make significant changes to their existing collateral management processes. Wow. Okay, so that is really interesting. So, of course, these are some new rule changes that DTC is putting out, but as you guys know, there has been a huge influx of the rules that have been coming out, and the timeliness of these rules actually being passed is really crazy. I remember back in even April, call it, where it was, a rule comes out in the filing process, it'll take 30 days, get pushed back to 90 days, and then implemented after like 120 days. That's 3 months. Now things are changing, and I really believe it's because of the stress of the overall market. And of course, as you guys know, Gary G, the Fed chairman here, he has really been coming out on Twitter saying that he's looking into the dark pools, he's looking into this derivative market and various other items as well. I mean, it's a different story of if they're actually going to do something with it or if they're just going to keep on saying, yeah, we're looking at it, we're looking at it, we're looking at it. But, guys, this could be really big. And as I said before, it's because of the volume of margin requirements, and you only can run from so much. And, of course, the other thing, too, is just this last section here. An increase in the need for third-party custodians to safe keep collateral. So that's something we're going to be looking forward to. Obviously, this does come out on September 1st, 2021. But the big thing is, I do believe there's going to be some preparation for this rule to come out. so that hedge funds, market makers, and banks don't get stuck with their pants down because that could be ugly. So we'll see how this plays out in the next couple weeks. And of course, guys, beautiful technical setup here on the one-day chart. Really going to keep an eye on this MACD crossover here. RSI still looking good. And boy, the apes are hungry as ever. So guys, with that said, that is all for today's video. Be sure to hit that like button and subscribe for more content. Enjoy the weekend, everyone. Peace out.